What's up guys? So last week I showed you how I was able to pass the phase 2 of the 50k FundedNext challenge. I got funded with a live account, and today I'll be showing you how I've been able to take my first trade and make just about $1,200. So here's the account, currently up about 2.4%. I was risking somewhere close to 0.8%, which is roughly about $400, trying to make about $1,200. If I go to the trading overview, you'll be able to see that here's the profitable trade on CADJPY. I had the setup today, which I'll be doing a breakdown in just a minute, but for now this is how my trading curve looks like on the new 50k funded account. Apart from this live funded account, I also have another account with FundedNext, but that one is still in the challenge phase. I was able to take the same trade on that account, and as we speak currently it's up about 7%, but keep in mind this is still in phase 1. The target is 8%. Currently I'm just about one trade away from passing this one, and it's the same trade I took on the live account which made me $1,200. And even before I do the breakdown, all this information about my trading style can be found in my trading community, where you'll get access to a member dashboard that has details on the in-depth approaches that I apply in the markets on a daily basis. We have about 25 videos which are very precise and to the point, explaining to you the exact price action that I use, the specific conditions I look for before I enter the market, live backtesting sessions just to show you the proof of concept around the edge that I have in the markets, which is the same that I've been using to pass my challenges and manage my funded accounts. I also do all these trade breakdowns in the community even before they happen, before the week starts, and the conditions that we are looking for before we enter the market, and everyone in the community is able to follow up with the same trades to see how they play out. More details on joining the community will be in the description. So let's get started with the breakdown. I had a bullish setup on CADJPY, risk to reward over 1:3. For those of you who know, I'm a trend trader, so CADJPY for the longest time has been on a bullish trend. I've only been taking buy setups on this market. If you go to the H1, you'll be able to see that just about 2 weeks ago, this is the setup that I took, which was able to pass the phase 2 of the 50k challenge. Then today morning, this is the setup that I got. Now, all my entries are very mechanical in the sense that I just have the same pattern of approach in the market every other time. So I don't keep changing my strategy, and that really helps me because when I open my chart, it's usually very easy to know whether I have a setup or not based on the criteria that I follow before I can validate a trade in the market. So this also helps to eliminate confusion because I've already defined the things I must see before I enter the market. So CADJPY first step on the daily time frame, you'll be able to see that the overall long-term trend is very bullish. If you zoom out your chart, without a doubt, you can see this market is heading from down and it's been overall going up. So the long-term trend is bullish, a lot of evidence of higher highs and higher lows. So in such a market, I'll only be trying to go long. So if I'm trying to buy, and then I'll be looking for the market to be bouncing off at support levels. And the whole idea is that these support levels show you the possibility of the trend continuation. For example, if it just starts somewhere here at the back, you'll be able to see that we did have a lot of wicks bouncing off at this same level. And that shows you that that is a sign of support resistance. Now, if the market is bullish, anytime the market comes back to that support level, there'll be a high chance that it should continue to go up. Usually you'll find very many levels of support resistance on your chart, so you can always mark as many as possible, but for me, only mark the most significant ones that give me the confidence that my market is about to continue trending in the direction that I want. So CADJPY being bullish, you can be able to see that we also have another support resistance level at this high, simply because we have price coming in, bouncing off. It got rejected the first time. If you go in future, you'll come and realize that price also got rejected here severally. At this point, you also had a sell. It started buying and it got rejected there the third time. So anytime price will come back at this level, if price is below the line becomes resistance. If price is above the line becomes support. So as you can see, in future, price went up and came back to retest the same level. Now at this point, it's support. So at support, we're expecting that the market should continue to go up. So long story short, if you follow these support resistance levels, for the longest time, you'll realize they've been respected very well. The market went up, came back and retested this support, went all the way up, came back down, retested the same support. It went all the way up until somewhere to this high, came back and retested the same support, and guess what? It continued going up. Now, after going up, we did have this significant pullback. But if you check carefully where the pullback has happened right here, somewhere at the left, we do have another level of support resistance. So it is a level because, again, you can see we do have price bouncing off there the first time. Price comes back here in future. We do have this wick bouncing off from the same level. We do have several rejections from the same level, and now recently, which is just about 2 or 3 days ago, price has come back to the same level of support. Now, as we've already seen in the past, most of the times when price comes back to support, what happens? There is a very high chance that it usually continues buying. As you can see, this is the first buy, we have the second one, third one, fourth one, all of them happening when price comes back to retest the support level. So when price came back to this support level recently, I'm also anticipating a similar thing, that there's a very high chance we might see price bouncing off and continuing bullish. Now, whether it will continue buying for the long term or it will just be a short term buy is not something I'm trying to predict, because I am an intraday trader, so I'm just trying to look for confirmations to get my small 1:3 risk to reward trade, and that's enough for me. So I want you to see what happened when price hit this support on Friday. So we did have a bearish candlestick, but on Monday, the first thing that happened is we got a strong bullish candlestick that bounced off at the same support level that has already been working here in the past. Also, the same bullish candlestick was an engulfing, which is showing us even a better sign that we have strong bulls coming into this market. So after getting this candlestick closing on Monday, from the following day, I can start to look for a setup. So now I can go ahead and delete all these things from my chart and bring you all the way to today, which is on Wednesday, to explain to you how I got my bullish setup. So before I can take a trade today on Wednesday, usually the previous day must have closed bullish if I'm trying to buy. The next thing is that I want to confirm the economic calendar is very clean, meaning there is no high impact news that affects either CAD or JPY. In the case you also have news like FOMC or the Fed interest rate, I also avoid being in the market because they usually affect all markets. And we have crazy volatility, which doesn't really suit my trading style. So today being Wednesday, you can see there was no high impact news. In fact, the calendar is very clean, meaning I can go ahead and try to get a setup. So here I've marked Wednesday, and the next thing I'll head to the lower time frame, specifically the 15 minutes, to just see how the market was behaving on Wednesday. Next thing is my trading day usually starts at about 6 a.m. East African time. So we're going to mark where 6 a.m. is, because that's where my interest starts in the market. The next thing I'll be looking for is a W pattern or a double bottom. So anytime I find a W pattern from 6 a.m. moving onwards, it will be a sign that this market is about to continue with the bullish leg. Now if I can zoom in just from 6 a.m., somewhere around here you'll be able to see that the market did this sell. The selling, we had a buy, we had a sell, and we did have a buy which closed above the neckline. As I've told you in my previous videos, this W doesn't have to be perfect, as long as the rhythm of the price is showing some form of W movement, which is exactly what we have here. Now the next thing is, after getting the W, you wait for the market to come and retest this middle part here, which is the neckline. So meaning after this W has been formed, the next thing is that you want to wait for price to come and retest this point, and it's at this point that I'll be trying to get a bullish entry, expecting the market to potentially go up. So let's go back to our pattern, which is here, and I've just zoomed in for clarity. Next thing you want is to identify this middle part, which is the neckline, and when price comes to retest this neckline, we'll be trying to get a bullish entry there. So if you check carefully, this pattern closed at about 7:15 a.m. and this next candlestick at 7:30 already came and retested this neckline. However, before you take the trade at 7:30, you also have to confirm the previous 1 hour candlestick, which must also be bullish and in line with the overall trend direction. All these things are just to increase the probability of my setup being as accurate as possible. So when the retest happens at 7:30, the previous 1 hour is the candlestick between 6 to 7. As you can see, 6 to 7 was bearish, meaning it wasn't respecting the overall trend direction. So by the time the market retested at 7:30, I did not take that entry because the previous 1 hour, which is 6 to 7, was bearish and against the overall trend. Interestingly enough, the next candlestick, which is between 7 to 8, now closed bullish. So when 7 to 8 closes bullish, I can now take any retest that will happen past 8 p.m. because the bullish candlestick on the 1 hour is giving me signs that strong buyers are about to come in this market. So now we go to where the 8 a.m. candlestick ended, which is here. So now from 8 a.m. moving onwards, because we've already seen the 7 to 8 was bullish, anywhere past 8 a.m. I'll be able to take the trade if the market comes and retests the same level from this pattern. So as you can see, at exactly 8:45 a.m., the market came back to that neckline zone, meaning it was now a valid bullish entry. So this is when I executed my setup. Somewhere at around that time, looking for a 1:3 risk to reward ratio with a stop loss of 15 pips and a take profit of 45 pips. And just like that, the trade took some time, but as you can see, eventually it closed in the evening. So the opening time was 8:45 a.m. The closing time was 4:30 p.m. That's literally about 7 hours 45 minutes, and that was a perfect intraday setup. And just like that, by applying my support resistance strategy, I was able to identify the market direction. I was able to identify the continuations happening from the higher time frame. And then I simply come and capitalize on that knowledge on the lower time frame to try and find a precise entry point. And that's the thing that many traders struggle with. Very many traders can tell you where the market is going. Very many traders will tell you that this market is in an uptrend. But then the struggle is usually to get those precise entry points in the market. Knowing exactly what you need to see before you enter the market, knowing the conditions that you need to avoid to be in the market, because it's these things that will help you to eventually have an edge and actually make some consistent returns in the market. And basically that's it from this video breakdown. I hope you've gained something from how I look at the markets and just that patience and discipline involved in looking for those high quality trade setups that respect the strategy, executing them perfectly and holding them to the final target. Be sure to give a thumbs up and subscribe. And the last tip of this video is simple. Risk to reward is always king. If you're struggling with trading, just try to increase your risk to reward. If you've been doing a 1:2, try to move it to a 1:3 or a 1:4. It won't take you so long to see how easily you can develop an edge with the reasonable risk to reward ratio, because you'll be losing less and gaining significantly more. Until next time, guys, peace.